Hello everyone, welcome back. Today we'll be trading with our best strategy live. So let's get into it. So the first thing that we need to do is identify a consolidation. As you all know, we need to identify a consolidation just like this one. This consolidation was broken yesterday. Today is, as you can see, today is Thursday. Yesterday was Wednesday, and this is how the shape, as you can see it, and the consolidation was broken right there, if you can see it. Okay, so after consolidating, how the shape finally broke out, so that is where we interested. Okay, and we put our take profit by measuring from here to here where the price broke. Okay, this candle is our TP. Okay, this candle is our TP. You can let the other TP to run. As I have told you, you can take out most of your trade, most of your profit out of the trade right there. Okay, right there, right when that candle finishes. Take the profit, take 70% of your profit out of the trade and leave the rest 30%. You can leave the rest 30% and let it run to the other TPs like TP2 and TP3. Do not wait for TP4. In this case, actually, it hit TP4, but in most cases, it does not. In most cases, it does not. This is how the shape. So, the shape pairs are all melting down. They are all falling. So that is why we are finding this bearish movement. Okay, so TP is starting to be hit. So TP4, the last TP. So we don't care about that. All we care is our first TP, or TP1. This one is our first TP right there, and we let the other 30% to run to the TP2. As you can see on the TP2, the price started to retrace. Okay, because of the powerful bearish momentum, it changed direction and it started to melt down again. So you can get out the rest of the trades that you left on the TP2. And if you want the others to run too until the TP3 is hit, then you can let that run to the TP3. But all I recommend is the TP2. Okay, the others TP3 and TP4 are very rare, so do your own thing on that. So this could have been a nice trade. This could have been a nice, beautiful trade. As you can see, it is a 2-hour time frame. So a lot of pips. There is a lot of pips. And let's find the others. Aussie dollar. So Aussie dollar finally reached the overbought position, as you can see right there on the RSI. Now it's starting to fall. Okay, starting to melt down. As you can see, a lot of structure has been broken right there and right there. So this could be a start of a bearish movement, bearish fall. So right here we have no trade. There is no trade at all. If you go to 4-hour, there is no trade too. Still no trade. If you go to 1 hour, there is no trade. This could have been a nice trade. If you can see it here, this is a bullish diagonal. If you know that I preach this bullish diagonal, bearish diagonal, and horizontal rectangles. Okay, there are three kinds of structures in this breakout, in this trend line breakout. So the first one is bullish diagonal, the next one is bearish diagonal, and the third and the last one is HR, or horizontal rectangle. It is perfect horizontal and like this one. Let me show you, not this one right there, connecting most of the wicks right there, just like that. This is called HR. Okay, this is an HR, which means horizontal rectangle. So which means we have to wait for the lower band or the lower trend line to be broken. But this one is horizontal. Bullish diagonal, and the other is bearish diagonal. As you can see down here, this is a perfect bearish diagonal. You can clone this one, put it down here, and you can perfectly see that this is a bearish diagonal, and this bearish diagonal is mostly broken to the upside, and we found a support. That is where you enter. If you missed that, you will enter right there, and you take profit from this one to this one and extend it to where the price broken the structure, and that is where your take profit will be. 70% of your trade will be out of the trade right there. Let the other 30% run to the other TPs. How do you determine the TPs? Just measure. You can just measure from this high to this low, this swing low, because this swing low is responsible for this move, and this move from this high to this low carries this price action. Okay, this price action, and this low filled the wick. As I have told you on the yesterday's video, if you have seen it, wicks, the candles wick, and imbalances and gaps, actual voids, if they are filled, the candle that filled that gap, void or wick, is a swing low, and that should not be violated. That will not be violated if you were in that direction, in the broken direction. Okay, so in this case, this one is the one that filled this gap. So your stop loss would be right down here. You determine your TPs by measuring from this high to this low. So this low can be found right there, just below, and there it is, your TP1. Okay, your TP1 is hit, but unfortunately TP2 was not hit, so the price just returned on the 0.6870. okay, right there. So that is why I'm telling you that TP1 is a high probability. It's a very high probability take profit point area, and especially this one that you this one, the height of the consolidation is the most trusted TP. Okay, it is the most. This one is the first one to be reached. This TP is the first one to be reached, and second the Fibonacci TP1, and third the Fibonacci TP2, if you can see it, and fourth the Fibonacci TP3, and TP4 is never hit. It mostly is not, it will not be hit. So in this case we don't have any trade, so let's just find another one. Okay, just find another one. There was a trade right here a couple of hours before, but now there is no trade. So let's jump to Kiwi dollar. Kiwi dollar, as you can see it, they all have reached their maximum overbought position. That's why they are falling. They are melting down. So they need to reach to the discount level. That's why they are melting. And as you can see, there is no trade here also. Let's get back to the 2-hour time frame. That is a little bit simpler and cleaner. Let's go to Aussie CAD. Even Aussie CAD also didn't give us any opportunity or any consolidation. What we will do is we will enter once the price breaks. Okay, the price broke to the downside, so we would enter right there, and our TP is, as always, it will be the height of this one. Okay, right there. Look how amazing this is. Look how amazing this is. So we broke the consolidation right there, and look how amazing this is. Exact. It is the exact match. And it is crazy. It's the exact match. Look at this. Look at this. So this is beautiful. This is the most highly anticipated TP. This is the most trusted take profit point. That's why I am stressing more on this method. Okay, this way is more trusted than the previous one. So if your 70% of your trade is out of your profit is out of the trade, then you will not worry if the price returns back, because your stop loss is up there, you are already in profit, and you are just trading with the minimum amount possible. So the price being retraced back up would not hurt you. It will not hurt you. So there will not be no worries at all. So this was a nice trade, and if you remember that we have 4 models. So right here there was 2 models happened right here. Okay, 2 models happened. The first model is a real breakout. It's just a real breakout. The first model is just a real breakout, which means there is no pullback, there is no break and retest, there is no support. It just melts, or it just rallies up. Okay, that's what it does. The second model is break and retest. Okay, after breaking, it comes to retest. Okay, it comes to retest, and so the thing is that there are 4 models. The first model is just breakout. Is just a real breakout. If the breakout is bearish, it will melt down. If the breakout is bullish, it will melt up. Okay, it will rally up, and there is no support, or there is nothing. And the second model is break and retest. If we are bearish, if we are breaking bearish, it will break and retest this one and comes down. If we are bullish, then it breaks, then retests this one and it will rally. So this is the second model. The third model is just one-way fake out, like you have seen right here. So what it does is, if we are breaking to the bullish, if we are bullish, it will break to bearish, the downside, breaks downside and rallies up to where the intended direction is. Okay, if we are bearish, it breaks to the upside and then tricks a lot of people and now melts to the intended direction. This is the third model in play. Okay, the third model is in play right here. Why? Because this thing broke the structure, just the downside, and what did it do? It reversed back and went up to the real direction. The real direction was reaching this level, okay, and it reversed up. So if you know the third model, after taking your profit on this one, you would enter another trade when the price starts to pierce this one, when the price breaks this one. You do not enter right here. You do not enter when the price makes a wick. You do not enter there. You do not enter when the price gets into the consolidation zone. You enter only when the price breaks the upper band. Okay, the upper band. So you you could have both you could have won both ways. Okay, because in this way your TP is this one, so you can project it. Your TP will be right here. On the upper Y is the same thing. Your TP is like this one. So in both ways you are in profit, and it's beautiful. It's amazing. It's amazing. So the fourth model is just double fake outs, or double fake outs, or two-way fake outs. Okay, these two-way fake outs, if we are bullish, we break. Sorry, if we are bullish, we break to the upside first. So if we are bullish, I'm sorry, the fourth model is, if the price is bullish, the real movement is bullish, the price breaks the upside and then comes down and breaks to the downside, faking both ways, and now it moves to the real direction. The real direction was really to the upside, bullish, but the price tricked in both ways and it went to the real direction. Okay, so when the price wants to break to the downside, so first it is consolidating and it breaks to the downside and it goes to the upside again, and after that it melts to the real direction. Okay, it broke in this way and it broke in this way, and the real direction was this way. Okay, it broke in this way, it broke in this way, the real direction was this way. Okay, so these are called double fake outs. Okay, these double fake outs should be avoided. You have to avoid double fake outs. Okay, when you see these kinds of things happening, do not take a trade. They are really tricky and you will lose money. Okay, so these are the four models, 1 to 4. So right here what happened is the third model. The third model happened. So if you had drawn a bullish, I'm sorry, let's put it in the trend line. Let us put it here. If you had drawn a bullish a bullish diagonal like this one, let's delete this one. So your ability to draw has its own significance. Okay, so this one and the previous things that I drawn are different. The previous was a triangle. Like this one, but now it is what? It is a bullish diagonal. They are completely different. Okay, completely different, but the trade we will take is the same. This is the same thing. When it breaks, we take the trade. Okay, we would have won this trade. Okay, because our TP is smashed beautifully. So this is the thing, and let us just go to the next thing, next currency pair, and let's see if we have any consolidations, any trading opportunities. Consolidations means a trading opportunity for us. Okay, this is a golden opportunity that you do not want to miss. Just like this one, look at this beauty. Just look at this beauty. So these kinds of things, we will be connecting this thing like this one. Hold shift to make it straight. Connect all the wicks just like this one. Clone it so that you do not have to do it again, just like this one. So what is this? This is a horizontal rectangle. Remember that I told you there are three structures: the horizontal, a rectangle, and the bullish diagonal. So if you remember that, we have the horizontal rectangle, which means both straight lines. They are both straight lines. The above and the below lines are straight line, but this one we have a bullish diagonal, but and on the third place we have the bearish diagonal. So we have three structures that we need to consider when drawing. And we have another a little bit different structure, that is a triangle. Okay, this is just like here. Okay, this is EuroCAD, as you can see it, just like this one. This is a triangle. Okay, we enter when it breaks the downside or the upside. Whatever the direction, the market will tell us. We don't have to know the direction. You don't have to know the direction. You should know the four models. That is all. The four models. The direction will be given by the market. The direction will tell us. Just wait, relax, and wait for the market to tell you what to do. Okay. So in this way, this is EuroCAD. We are waiting for a break. Okay. We are waiting for a break. Let me correct this one. We are waiting for a break. This is a consolidation, and this consolidation will be broken. This consolidation will be broken one way or another. The market will either go up, go down, or will either go up. Okay, so all we have to do is wait for the market to tell us which direction it wants to go, and then we will take a trade. We will consider our four models and we will be in the trade. We will consider our drawing, just like here we had some kind of bearish diagonal, and this bearish diagonal was broken to the upside. If you measure from here to up there, they are equal in distance. They are equal in distance, which means your TP is hit and you are out of the trade. You are out of the trade before the market retraces back. So let's jump to the next currency. This is EuroCAD, so we don't have any trade. We just we just put our trap and wait for things to happen. Let's go to dollar CAD. So I was waiting for dollar CAD to make a progress, to make a thing. So what it did is it just connected this one. Let's just connect this one, and this is it. This is how we do it. Just connect this one with this, because believe me, when the price comes and pierces this line, and you would immediately enter a trade. Do not do that. Why? Because there are a lot of fake outs. Okay, there are a lot of fake outs. So yeah, you don't want to get caught with the wrong uh, direction. Okay, so in order to prevent that, you have to connect the new swing lows, swing highs and swing lows. So generally the price is just trading in this gap. Let's see another thing here. So right here, what happened was, if you measure from here to down here, this is the length from here down here. Then actually the TP was hit, smashed, but generally you need to consider this one. Okay, when drawing, I always draw like this one, but generally you have to draw like you have to connect this one too. This cannot be empty. Preferably it has to be straight line. Okay, why? Because if the price breaks this straight line, hold shift to make it straight. If the price breaks this straight line and melts, this is a sure way of knowing that the prices will melt down and will continue going down. Okay, this is a sure way. And I have seen it 1,000 times, and the market will surely trick you. Okay, it will surely trick you. But if you draw a straight line and wait for a reaction, you would see that you are wrong. You would see that this is just a one-way fake out or a single fake out. Okay, so that is how you filter out fake outs. Whether it is a single fake out, whether it is a double fake out, we don't care. This is how you do it. You draw a straight line from the swing low and you wait. If the price continues falling, then that is where we enter. That is where we enter, okay? That is a definite way. That is the treatment for this fake out disease, okay? But in here we had a great uh, breakout. So in this case, what we should do was, we don't need any line, we don't need any other line, just the arrow. We can, we can do a cloning. You can clone this thing and put it down here. Why? Because you have to connect this swing low. Connect this swing low, because this swing low is a part of this one, okay? This candle is a part of this consolidation, okay? So do the same thing to the upper side, to the upper side, just like this one, okay? Just like this one, just like this one, okay? So all you have to do is wait for the lower band to be broken. Wait for the lower band to be broken, okay? Where is the lower band? This one, okay, this one. You do not enter there, no, you enter there, right there, right is that candle's low. When that candle pierces that one, you enter there. Your stop loss is obviously this side, but you can put it up there. Your stop loss could be up there, because these candles failed this weakest high. This candle's weak. Okay, so this can be regarded as a swing high. So swing highs are generally not violated. Okay, this swing high, is generally not violated. It will be respected. So the price could just come up there, but cannot go up there. Why? Because this swing high filled this week. Okay, I just told you that the week is important. The week has its own importance. Gaps have gaps have their own importance, just like this one. If the market makes a gap, this is a gap, this is a void. Imbalances have their own importance too, okay? So this is a swing high cannot be broken to the upside if we are down. So that is what happened right here. That's what happened right here. So you would enter a trade. You would enter a trade right there, down there, not up there, okay? Because that the price could just break this lower band and continue going up, okay? Continue going up, and it could just be a buy, a buy. So in this case, we are trading in this band. So let's come to the QE card. We had this consolidation, as you can see it, and we finally broke this thing. But I didn't make this consolidation to take a trade. Okay, this is just a guide. It is just to guide me to where it wants to go, whether it is up or down, okay? So when drawing these kinds of trend lines to identify the highs and the lows, all you have to do is connect, okay? You have to connect both the ups and the lows, the highs and the lows, just like this one. I'm sorry, the connection is very bad now. So you have to connect the most recent one. Do not connect the swings, the swings like. Let me show you. This kind of swing, we don't want this kind of swing. This is huge, and we don't want this one. And even if it breaks this consolidation, it would take days, it would take weeks to reach the TP. Okay, to reach just this TP, it would take weeks. Okay, if it breaks the upside. So all we have to do is consider finding the most recent consolidations on the 2 hour, on the 4 hour, or on the 1 hour. Do not go below the 1 hour. It is dangerous. Don't do it. Do not go above the 4 hour. Don't do it. Okay. So our gap is between the 4 hour and the 1 hour time frame. This is the time frame that you want to find your consolidation, because most of us want to finish our trade inside the daily candle, right? So we need to finish it inside the daily candles, because the commissions, the what is a swap, and these all things add up to minimize your profit and just uh, make you lose more money. Okay, make you lose more money. So the thing that you have to do is consider on the 1 hour to 4 hour time frame. If you don't find a consolidation on the 1 hour, jump to the 2 hour. If you don't find a consolidation on the 2 hour, jump to the 4 hour. Okay. If the 4 hour consolidation is not clear, jump to the 2 hour again, back to the 2 hour. So all you have to do is 1 hour, 2 hour, and the 4 hour. Just like me right here, okay? Just like me. All I'm considering, I mean, focusing is the 1 hour, the 2 hour, and the 4 hour time frames. These are the daily trading opportunities, okay? Where we get our daily trading opportunities. And believe me, you will find a trade every day, every day. As you can see, we have a lot of currency pairs down here. If you trade forex, you would have a lot of currency pairs, just like this one, the Aussie dollars, the euro cards, and all of them. And there are almost more than 40 currency pairs. There are almost 40, more than 40. So among those, at least one third of them will have a consolidation, because as you know, 80% of the time, 70% to 80% of the time, the market is what? Consolidating. It is just moving in what? In a ranging market. It is moving in a ranging market sideways. Okay. So 1/3 of the currency pairs from out of the 14 currency pairs, the 40 currency pairs, 1/3 will have daily what? Daily trade. They will have a daily trading opportunity. They will have a consolidation. So the next thing that you have to do is identify your highs and lows, just like this one. Okay, just like this one. Just like this one. So this would have been a great trade if you measure this one to this high, just like this one. This is where you get out. 70% of your trade would be out of your profit would be out of the trade. Right there, right there. And you let the other run to the TP2, the TP1 and the TP2 of the Fibonacci, okay? Just like I showed you on the previous thing, currency pair. So you measure from up there to the down here, and your Fibonacci, the Fib will tell you that TP2 will be around here. Okay, TP2 is around here. Believe me, it will be around here. So that is where you get as the other 30%. Okay, we have seen Kiwi card before. Now pound card, as you can see, we have a bullish diagonal. So we don't give a damn if it breaks to the upside or to the downside. All right, all we have to do is all we wait for the price to break. Okay, it can be the upside or to the downside. Okay, that's not our business. So we just put this one, and optionally you can put an alarm right there. Just because I didn't put an alarm, I just missed a huge trade on the copper dollar trade. As you can see it here, it was a beautiful trade. It would have been a great trade, as you can see it, but unfortunately I missed it when I saw this. It already melted. It has already melted down here, so there is no point in doing anything. So you measure from this to here, and then to determine your TP. If you recognize that, if you notice that this is gocharting.com, that one is tradingview.com. Okay, I use both of them. So you project it using this one. So your TP is exactly right there. Okay, it is exactly right there. Okay, if you measure it on the wider sense, on the wider one, you expand this one and you measure again where it broke the consolidation. That is where it broke it. So the TP will be right there, right where uh, the candle stopped trading. Okay, that's where your TP. But when you let the other 30% of your profit to run, as I have told you, you remember that your TP will be, let's use our Fibonacci. So when you use a Fibonacci, what is gonna happen is you use from here to up there. Okay, this is how you do it. This is how you do it. So TP1 would be right there, TP2 is right there. Okay, remember, I mean, look at this beauty. It's just crazy. It is right at the moving average, where the moving average and the price meet. This is where the point where both things are equal, and where this whole price action is accumulated before, okay, earlier. And this is this is a huge supply zone, I mean demand zone. Now this thing is a huge demand zone, so getting out of the trade right here, 70% of your profit right here is the smartest thing to do, because the price mostly does some kind of break and retesting, and it would continue moving up. Okay, after breaking this one, retesting and moving up. Okay. Sorry for the background noise, it's on my end. I apologize I'm very sorry. So so your second tip is this one, and your third tip would be right here. If you let it run, your third tip could potentially be hit. So that is how copper behaved. Okay, that is how copper did a great trade. That would have been a great trade, but I didn't see it, so unfortunately, so I am very annoyed right now that I didn't put an alarm right here. So I don't know how to place an alarm in this gocharting.com platform. So if you guys know anything about this, just let me know in the comments. I will appreciate it. Okay, so let's get back to the other ones. This is a pound card, as you can see it. Yesterday there was a huge let me put it up there. That is how we do it. I just put it there because I wanted to connect both of them right there. Okay, that's why this one and this one. Okay, if you encounter these kinds of things, so all you have to do is do a diagonal, do some kind of diagonal. Okay, If you do a diagonal, this thing would eliminate. This would be eliminated, like just this one, like this one. Put it here. Clone this one. It's just simple. Clone this one. Put it down here where the price is right now. And as you can see here, the price broke it down here, right? So you just measure from up to the bottom and put it down here where the price broke the thing. In this case, it didn't hit the TP, so it didn't hit the TP. Maybe because our drawing is not right. Okay, or maybe our drawing is not right. Our drawing should be down there, right there. Okay, that is better. And now we can measure this one up there. Now again where it broke it. So now it is perfect. It's perfectly matched. This is a candle that broke it. We do not care if the price jumps up there. We don't care. Our stop loss is up there, so there is no there is no way it's gonna touch it. Okay. I think in this case it did touch our stop loss, but a little bit above the swing low, the swing high. So it will not take you out of the trade. But this bullish move happened after the price went bearish, after the price has gone there, down there, and moved up. Okay, the price first melted down. It is obvious, and then finished bullish, right? So you can see it. After hitting your TP, it finished bullish, so you don't even care. Why? Because you took 70% to 80% of your trade out of the trade on the first TP, right? 70 to 80. That's why I always tell you, that's why I always stress that to get out of the trade once, to take 70 to 80% of your trade once the TP is hit right there, okay? Right there. So that's how you do it. The most complex consolidation can also give you a nice profit, as you can see. This is not pretty, but we did manage to get a profit out of it. I might be wrong, but I don't even care if I'm wrong, because all I am doing is waiting for a breakout. That's all I'm doing, waiting for a breakout. If this thing breaks out, so our TP would be, if it breaks to the upside, our TP on the second candle, our TP is right there, okay, at the 1.7, 1.697 right there. It breaks to the downside, it will be down here. That is 1.68560 right there, okay? And we let it run. We let the other 20% or 30% to run, okay? So I have put an alarm down here, so it might go up and break to the upside, so it can do whatever it wants, but all I want is a break. So let's go to Eurohousey and see what it is doing. So in this case we don't have anything. In this case we don't have anything. This is Eurohousey, right? So we don't have anything. This is a trending market, so we don't want a trending market. We want a ranging market, okay, a consolidating market. So this is a trending market, so there is nothing we can do. A trending market is traded with a supply and demand, okay, with supply and demand concepts, right? So if you had drawn a rectangle down up there, you could have sold when the price hit that thing right there, okay? It doesn't always happen, so you gotta be careful on the supply and demand things. concepts. Okay, it is very difficult. It's very difficult, and it takes time it takes time to hit that one. Okay, so supply and demand zone is very difficult. It's for the more experienced and for the more patient ones. Okay, but ours has a lot of trades we can take. So in this case we had 2 3 and we had another. So in this case, if you had sold this by using a break and retest, this would have failed because the price just went bursting up, rallied up. Okay, so in this case it failed. Oh, here we got until here, but it failed again here. If you had entered here, you could have been in drawdown and finally in your direction, in your favor. Again here you could have sold and that was good. Here you are a huge drawdown and a little bit profit, and then finally against your direction. So it's very difficult. It's very difficult to uh, trade these kinds of supply and demand zones. Okay, it's very difficult. So let us delete this one. We don't need this. We don't need this. So there is no trade in our case. Let's go to pound housing. The same thing here. There is no trade because, as you can see, this is almost a trending market. Okay. Let's go to dollar yen. Dollar yen is melting like it's melting huge. We had a great opportunity here that I missed. So I am really annoyed because of this, because this would have been a great trade. As you can see it, this was an amazing trade. This could have been an amazing trade. I'm sorry, not there. Put it up there. Yes, that's the one, and that is where you enter. That's where you enter. Okay, that's where you enter. You can use your fib from here to here. TP1, TP2, now going to TP3 right there. But to measure it accurately, what you have to do is from the high to the low. Okay, from this high to this low, you measure it like just like this one. Put, I'm sorry, put this. So TP1, TP2, TP3 hit in this case. Okay. Why did I do that? Because look what the price did. Look what the price did. This is swing high to swing low. So the price just went up and hit this premium area, or this uh, expensive area, or above the equilibrium, the 50%. So that is where you sell. So when the price is down here below the 50%, that's where you buy. If it is above here, that's where you sell, right? So it is above, from here to here, the price went above. So you measure from that to this one, and it hits the 71% retracement, and then we got our TP3 right there. So dollar yen could have been a great trade. As you can see, this is beautiful. That's why I'm telling you. That's why I tell you that this breakout strategy, it is just amazing. It is just amazing. It is simple and it's powerful. It's really powerful. Look at this here. 1, 2, 3. Isn't this clean? It is amazing. It is clean, beautiful. And now the second model is in play now. Break and retest. Okay, that's where you enter. You can enter right here. You can enter down here. You don't even I don't know, there is no difference at all. Okay, so the price just went up. Okay, as always, measure this high to low and you put your take profit just above here, right there. Okay, you let the other 20%, 30% to run. again double this one right there. Okay, that is how you take money out of the market consistently. So we don't have any trade on the yen pairs at all the yen pairs have no trade at all, so we don't have to uh, tire ourselves with this thing. So as you can see here, there was a nice consolidation. That's where it reversed back. So after before reversing it consolidated, before reversing it consolidated, before reversing it consolidated, right? It is just amazing. Before reversing, so consolidated. This is just amazing. So that's why we are hunting for this consolidation zones, because they are the beginning of a huge trend. They are the beginning of a huge pip movement. So that's what we want, right? So as you can see, all the yen pairs have no trade at all. They are all trending. They are all falling. Let's see how the shape. So how the shape previously I showed you, and this was a nice consolidation, nice sell. This would have been a nice sell up to here, but if you let it, the other 20-30% to run, you can let it run. Okay, that was a great trade, and now we don't have any trade. Eurochef, of course, Eurochef 2 has no trade. I mean, has no trading opportunity. There is no trade here also. Pound chef, we got no trade at all. All the chef pairs are already uh, melted down. Okay, already gave us opportunity to enter, right? If you hold shift, you will get this thing. You will get a straight line. As you can see from the downtrend, I mean the lower trend line to the upper trend line is so beautiful. It is so clean, and it is so. I love these kinds of things. I love this kind of horizontal rectangles. They are just amazing. I love them. I love them. There is no fake out. Uh, there is no trick. No tricking at all. It's just amazing. Look at this shit, and it melted like it is water. So dollar shift, I mean pound shift has no trade at all, no consolidation. Right here, as you can see, there was we had a nice run. As you can see, a nice trend. I mean pennant, bearish pennant, then it melted as bearish pennant. Another consolidation. That is why we are hunting these kinds of things. Okay, that is why we are hunting these kinds of things. Okay, just put it there, shift, hold shift, and put horizontal, clone this thing and put it up there. That is how you do it. Okay, that's how you do it. Okay, so we got a retest right there. So this is the second model, break and retest. Beautiful execution. It is just amazing. It's just amazing. So on the euro pound has also had also given us some beautiful trades right there, as you can see it, and it is just amazing, and it's just beautiful. Um, it, Amazing! It's amazing! It's amazing! It's amazing! I don't know what to say, people. I don't know what to say. You can't get any more simpler. You can't get any more uh, clean than this. There is no rule, there is nothing. All you have to do is find a consolidation and wait for a breakout. There is no other rule. There is no other rule. That's all you have to do. That's all you have to do. So, as you can see, everywhere, it is everywhere. It is everywhere. Everywhere. Consolidation everywhere. And we had a great move. Of course, it is not going to work always. It does not work always as expected. So do not put your hopes high, so high that it touches the sky. So I mean, do your own diligence. Okay, be prepared to lose some money, of course. because there will be some fake outs. As you can see here, there was a huge consolidation before reversing direction. So that this is what I am telling you. This is what I am telling you. I love rectangles, horizontal rectangles. So break and retest, baby. Break and retest, baby. This is amazing. This is beautiful. Then we went up to where we continued our business. If we measure this thing from up there to down here, we would get TP1 right there. Nailed it and retraced back. So TP2 would be up there, okay, right up there. It might come up there, okay. So this euro pound, that's why euro is very dangerous. It is very powerful now. Pound is relatively weaker, so that's why euro is pumping up. So we don't have any trade here. We have already missed it. Let's go to pound dollar. GBP USD, another great trade missed. This was, if you go to the 1 hour, it would be cleaner, okay. Just like this one, hold shift, put it there, clone this thing. How do you clone this thing? You can put this one right down here, or and take this trade, this bullish movement. You can, because your TP is already hit, okay. Your TP is already hit. Once the price touches that, as you can see, your TP is hit. This is your 1 hour candle, so your TP would be hit right there. And when the price pierces this one down here, you would be selling. Why? Because the third model is in place. In play, okay. The third model, what is it? It is a one-way fake out, okay. This is what's happening here. So what is happening? Boom, and one-way fake out or single fake out. Boom. Then we have retest, the second model. Then boom, we are finding a retest right here. There is a retest, and we will be falling down, okay. We will be falling down, and this is amazing. This is amazing. I'm not telling you to trade the retest. No, don't do that. Don't do that. All I am telling you is trade when the price breaks out. When the price breaks out, there is no retest, there is no pullback, or there is no waiting for other things to happen. Only trade the breakout. The breakout. We want the breakout, not the retest. Okay, we don't want the retest. It is very tricky because it could pierce through and continue moving up, making this a double fake out. Okay, so let's go to the other euro dollar, because there is no trade here already done. It's already missed it. We have already missed it 2 hours ago, 3 hours ago. So if the price makes an unnecessary wicks from above, below, and another wick like this one, and this one, and this one, and this one, so you don't connect it like this, okay. All you have to do is go to the higher time frame. Go to the higher time frame. Remember what I did on the previous, on the pound dollar? I went from the 2 hour, and when it was not clear, I reduced it to the 1 hour time frame right there. I went to the 1 hour and it was all clear, okay. It was all clear. In this case, you can connect this thing like this one, okay. This is a bullish diagonal. This thing breaks to the downside. I'm not telling you the direction. I'm not telling you to predict the direction. Do not ever do that. Do not predict the direction. I am begging you, please. You will be disappointed. You will be wrong almost most of the time, and that will demoralize you. So even if it is to the upside or to the downside, it is still difficult. So do not think that it is simple and just predict every movement, okay, every price movement. No, don't do that. So if you notice this one, this is a Fibonacci retracement that I took when the price was down here, right there, okay? When the price was right here, I was waiting for the price to reach this level. So it did right there, it hit it, it hit the TP1, then now TP2. That is the TP3, the maximum TP that the price could barely move up there, okay, because TP1 and TP2 are high probability, that's all. That is why. So I have measured it down here, and now the TP1 was here, TP2 right there, and TP3 was up there. So yeah, so I took this trade and I bought it, and I got out around here last couple of weeks. So and that was a great trade. This one, as you can see, this is a bullish pennant, and it broke to the upside, and there was no fake out, and it was amazing. So I took this trade, boom. I was in profit before I knew it. So let us just delay this one. We don't need it anymore, or delay that one. Okay, because we are gonna draw another of our tool, right? This is our weapon. This is our weapon. Put it there. Make it clean. Clone it, because the angle is the same. The angle is similar. So put it there. And now all we want is a break to the downside. Why? Because we are on the overbought position, okay? It can break to the upside, we don't even care. If it breaks to the upside, we will be entering a buy. Because even if the price, I mean the RSI tells you it is overbought, the price just continues moving up. It continues moving. Look at this peep. It was a huge loss. This was devastating. Okay, so I mean, relying on the RSI solely will kill your finance. Okay, and your psychological, there will be a huge psychological impact. Okay, so all I'm waiting for is for this crossing. I have put an alarm if you notice this. So we will take a trade once it breaks down, and our TP will be down here, right? Okay, down here, right? Down here. Our TP is down here, so we'll put our TP right down here, down there, right? So I will let the other 20 or 30% to run to the other TPs, take profit. So we'll see what happens. Okay, most likely the price will reach this one, because this is a buy zone, so they will bring it down here. Okay, perfect. On euro dollar we have set up our strategy. Now let's go to gold. Gold, as you can see, has no any trade. It didn't give us any trade, so we didn't there is no trade in here. Okay, in this case we did. That is why I'm telling you to clone this thing, clone it. Okay, where did it go? Or hold control and okay, do it like this. Okay, all right, yes, yeah, this was the previous supply zone that I drew. So let's delete this one. We don't need this, and connect this line with this one. Okay, this up line to this one, right? If you notice this, we enter once the second band is broken, not the first one, because the first one has tricked us. It tricked us. Okay, if there is another candle just before the consolidation, you have to count in that too. You have to connect that too. Okay, this one is as it is, so we don't have to worry about this thing. So if you are taking a sell trade down here to here, this would have been a losing trade. Why a losing trade? Because it didn't hit a TP, right? it didn't hit your TP. So okay, didn't hit your TP. First thing it did was it went to the upside. It was bullish, then retraced back. Okay, it retraced back. So in order to prevent that, what you have to do is you have to draw your drawing determines your success. Okay, this line, clone this line. I'm sorry, what did I do? Clone it and put it down right there. Okay, that is what you do. That's how it is. It is a bullish diagonal, not a triangle. This cannot be a triangle. This is a bullish diagonal. I mean a bearish diagonal, not bullish. Bearish diagonal, which is stepping to the downside. So what it did was it broke. This is a two-way fake out. As you can see, this it is a two-way fake out. So at all costs, you have to avoid two-way fake outs. As you can see, this is very difficult to determine where the breakout will be, where the direction will be. As you can see, it broke it to both ways. So first to the upside, then second to the downside, and third to the upside. That is the typical. That is a typical double fake out. Okay, this is a double fake out or the fourth model. This is the fourth model. This is the first of the fourth model. As you can see here and here, it was broken and it went up like after breaking in both ways. So in order to combat this thing, um, you might use some trend line to guide your breakout where the breakout could take place. Okay, if you had used a trend line, the trend line would have told you that the breakout, this is the false breakout. So in this way, you might filter. You might filter this fake out trades. Okay, if you use a trend line. Okay, trend lines are the secret. Trend lines are the most powerful tool that you can use on this charting platform. It's just amazing. It's just amazing. So as you can see, this could have been prevented if we had used a trend line. So next time I'll definitely use a trend line to guide my breakouts. Okay, so that is the main point to take care. So now we don't have any consolidation, so there is no trade. Let us go to SPX 500, S&P 500. So there is no trade here also because the consolidation was here and we missed it. This was a great trade and we missed it. That's why I'm telling you it is everywhere. It's everywhere. So we already missed it. So that is gone. Nasdaq, it is the same thing. Alright. On Nasdaq, we might have something here. Okay, first thing to do is just this one. Okay, you connect it. No, connect it to straight line. Let's connect it in the straight line. Okay, and then clone this thing, bring it down to the downside here. You can put it down here if you want. You can put another thing, another trend line down here and wait for this two trend lines to break, right? So all we want is a breakout. So I will be waiting for this to break. It does seems like they were on the overbought position, so I think this thing might fall down. So that's not our concern. So after putting this thing, just go to the next currency pair and indices. This is an index, so US 30, Wall Street. So we don't have any trade like the S&P 500. There is no trade on the cryptocurrency, on the Bitcoin. Bitcoin. As you can see, yesterday I was trying to buy Bitcoin down here. It was down here, and I hesitated. Okay, I hesitated. There was no consolidation in the, but here we had a consolidation. Here we had a consolidation. Nice consolidation. Nice consolidation. Nice consolidation right there. And there. Before moving up, there is always a consolidation. Down here, up there. It's everywhere. So the next thing that I assume the Bitcoin will reach is 46,800. 46,800 is the next TP. Okay, take profit. So that is, watch out for that. Let's just there is nothing here. Let's go to oil, US oil. So on the US oil there is no trade. So yesterday, as you can see, not yesterday, that was yesterday's trade. I didn't take this trade because I didn't see it. If I had seen this, I would have sold it, and would have been a great trade. But I didn't see that. Uh, I saw it after it formed, after it was after it reached this line here, this 74 point, okay, 74 level. Here there was another great, amazing trade, amazing sale, and down here also there was a great trade. I deleted it. I deleted the trend line because it is too clogged. It's too clogged. It was too clogged. Let's go to silver because we don't have any trade on the oil. You could have profited from it because TP is hit. TP is hit without no doubt. Even if it is a small peep, TP is hit. Okay, before even the price retraced back. So right there, this would have been an amazing trade. All I am showing you is a one-to-one trade, a one-to-one risk to reward ratio, because the price retraces. Okay, the price reverses direction. That's why it reverses almost immediately. So we have to get out of the trade after doubling our money, after doubling our trade amount. Okay, that's what we are trying to make. Then, as always, let the other 30% to run. Okay, let the other 30%. It will not hurt your balance, your portfolio. Right there was no trade, almost not great. That was not great. So you could have done it like this one, and clone this thing and put it down here, just like this one, and that could have been another nice trade, but we didn't see it. We missed it. So these are all the currencies that this is dollar index. As you can see it, dollar index, as you know, measures the 7 major currencies movement. So dollar index is now on the oversold position, which means we will be starting to move up until to this supply zone. So we will be starting to move up soon. So that's why the other euro dollar and pound dollar are falling. Kiwi dollar, Aussie dollar, all are falling now. Okay, because dollar index is moving up. That's why. Okay, that's great. So let's go to the go charting. As I have told you, as you can see this place is a buying zone. That's why we are making a bullish movement. Okay, bullish move. So after hitting our TP2, it is nice to get out of the trade. Okay, so that is how we do it. Let us see gold. We have seen gold already, so we have seen silver, gold. So and this is oil. We don't need to see that. Dollar shift, we have seen it. Dollar card, we have seen it. US 30, UK 100. We didn't see UK 100. If you trade indices, UK 100 could be one of them. So in this case, we didn't have any we didn't have any trade. But on the 1 hour, you can see that there was a great trade right there, and you just clone that one, put it down here, and wait for the break. And we had the break that one, and we would have sold it. And look at this nice fall. That would have been an amazing trade. Next we have SPX and the P500. We have already seen it. Soybean. This is commodities. So if you trade commodities, you can see there was an amazing. So there is still going on, as you can see it. So put it here there and clone, bring it down here, and as you can see, this is how you do it, right? So this is how you identify consolidations. So now all we are waiting is for a breakout. Okay, we will be waiting for a breakout. Let us put a green because we have some kind of we have set up our thing and we are waiting for a breakout. This thing means this is a labeling thing. Okay, we have seen QE dollar, so we don't have to see it anymore. Nasdaq, all of them. What we didn't see is this QE, GBP and ZD. We didn't see pound QE. Euro QE, where is Euro QE? Right there, Euro QE. There is no trade. There was a nice trade right there, but this would have been a nice trade. So you can see it, right? But before running up, it did what? It faked us. Okay, it faked us out. This is a fake out. This is a fake out. A freaking fake out. So most of the time this happens. So you have to be careful. How do you prevent this? You can use trend lines. Okay, if you go to the weekly, if you go to the weekly time frame, this could this thing could have come from the previous trend, the previous bullish trend or bearish trend. Okay, so you connect with a trend line. There could be some kind of support to it. Okay, so by using that, you will prevent yourself from falling into these traps. So this thing, this pound kiwi did what? It did like this. It came down here and it went up. Then it came down again, then it went up, right? That's what it did. So this is a fake out, right? So in order to prevent this fake out, all you have to do is go to the higher time frames. And mostly there will be some kind of trend. Okay, a trend. So you draw that trend. And you wait, and you determine, you relate, right? Relate if it supports the price or if it resists the price. Okay, if it is below the trend line, it resists, which means we will not be breaking to the upside. If it is if the trend line is below the price, then the trend lines below the price, then we could be supporting it. So there is no point in breaking down, because if the higher time frame trend line is supporting it, what is the point? What is the thing? What is the point of breaking the downside? Okay, in the lower time frame, it will not happen. So that is how you prevent this fake breakouts in the higher time, by going to higher time frames. Okay, so this is how you use um, trend line breakouts. This is how you use trend line breakouts to take your trades, okay, to profit from these movements. And it is really amazing, and it is really amazing. It's really amazing. As you can see here, the example is endless. It is endless. Down here there was a bearish pennant, boom. There is another bearish pennant, boom, bearish flag. And we had another horizontal rectangle, boom. Then retest, boom. And there we have another horizontal rectangle, boom, to the upside. Okay, the upside. So it is just amazing how powerful this is, and it is everywhere. It is everywhere. You will take your trade every day. Okay, that's amazing. So do this, and I will see you in the next one. In the next video, we will be testing, we will be trading on the crypto market. We will be using Euro, Ethereum USDT, BTC USDT, Solana, and Axis, and all of them, near alt, and all of them. We will check them out, and I will see you in the next one. So thank you for watching. All right, I'll see you in the next one.